Welcome to the Sandpit Startups podcast, where we journey into the minds of the brightest and the best the region has to offer. It's our mission to connect the entrepreneurs in the studio with the entrepreneurs sitting at home. We sincerely hope the next half an hour motivates, inspires, or educates you. And if it does, you know where the follow button is.
In today's episode, we have Asher Siddiqui, who's a general partner at Sukna Ventures, which is an early stage Middle East and North Africa VC firm. Asher has been an entrepreneur, but also has been part of the leading management team in 500 Startups, which is a global venture capital firm in the Valley. Thank you so much, Asher, for joining us on this show.
Thanks. Great to be here.
Great to have you. So you've not always been a VC, but you are now. So please tell us about the journey before and how you managed to get where you are now.
Sure. So so I actually started out. I'm a lot older than you guys, so this may the
Not in
dates.
spirit.
Yeah,
Don't worry.
the dates are these are old numbers, but I started out in the 90s. Mm-hmm. When I was a student, I was an entrepreneur. I was always sort of hustling, building stuff. In '98, I graduated in the UK, and then I decided I didn't want to have a job. And I packed my bags and I sort of moved to the US. And the next 8 years, I spent it hustling, building products, serving customers in the UK, in the US. And then I sort of came to Dubai on holiday in the sort of early 2000s. And that's when I met this girl. And I needed an excuse to stay in Dubai. So I kind of took a switch. So I went, 8 years of entrepreneurship, and then I kind of switched into the corporate world. So I got really, really lucky. In 2006, I joined Etisalat as their first external hire in the mergers and acquisitions department. So M&A, investments. Yeah. I didn't know anything about telecoms. I'd never had a job in my life. And I didn't know anything about M&A, corporate finance, or telecoms, or any of that stuff.
All right.
So I started as an analyst, 2006. 3-4 years later, I was the youngest vice president in the company, and 4 or 5 years, I was basically global head of M&A.
Wow.
So I led the firm. I led $15 billion worth of M&A transactions. But by this time, that girl that I mentioned. So we got married. We now have 2 daughters. So I started to feel that entrepreneurial itch that I had.
Yes.
But also, I started to I really enjoyed investing. I really enjoyed doing, sort of M&A. Loved that environment. And I loved working at Etisalat. It was just an amazing experience. But it was still me being an employee, right? And I had this entrepreneurial itch. And so I kind of thought about combining my investment background with my passion for tech to put it together. So I kind of started working on that. And then, I used to have open conversations with my boss, and my boss was like, well, maybe we should explore corporate venture capital. So I started working and developed the corporate VC platform at Etisalat. But after a couple of years, I realized that, maybe the pace that I wanted to go was not the pace that a corporate would normally go. And this is kind of typical for corporates all over the world. So basically exactly 10 years from the date I joined, so 8th of April 2016, I left. And then I joined 500 Startups as a partner and part of the global leadership team. And then I started commuting. So my job was based in Silicon Valley.
Okay.
But my wife didn't want to move because she's like, we live in Dubai. Why would I ever want to, pay pay 50% tax and reduce the quality of our lives by 70%. So I started commuting. So I used to commute when I was in Etisalat. I used to commute like an hour and a half from Dubai to Abu Dhabi. And I converted that hour and a half in a car to 16 hours in an Emirates plane direct. Yeah. So I did that for 3 years. But, I started to get, and I was part of the sort of leadership team, building out the firm. But that was tiring. So, I kind of refocused on the region. So 2019, I left the firm and started to look around for what I wanted to do myself as a VC firm. And around that same time, there was a bunch of my friends who also left 500 Startups, And then I started working with them, helping them build out their VC firms.
Okay.
And when that started to happen, then a bunch of other my friends started thinking and contemplating, getting into venture. So I started mentoring and coaching these general partners, so these emerging fund managers. And so long story short, over the last 4 years, I've helped to co-found 4 VC firms. One in India that is Lumikai, which is the only gaming and interactive media focused VC fund in India. Another fund, Zain Capital in Pakistan, which is like early stage. And I'm on the investment committee of both of these. And then Race Capital, which is Silicon Valley based enterprise infrastructure focused early stage fund. And then Sukna Ventures, where I'm full-time as a GP. And so I kind of liked doing both. I like investing in early stage founders in the region. And I also like, dabbling in, like in Silicon Valley, in India and Pakistan. And I'm also on the advisory board of a couple of other funds in the Valley, in Switzerland. We can go on and on, but yeah,
Awesome.
that's my sort of windy road to venture.
Yeah. Sounds like a good road to travel. I want to take it back right to the start. Right after you said right after school, you jumped straight into entrepreneurship. I was the same about half a decade ago, but I feel like the curriculum and the way that everything's set up is not really geared to push people in that direction.
Yeah.
So despite seeing like a massive spike in new entrepreneurs and youthful entrepreneurs, they're not really getting perhaps the support that they need. And then they're ending up just taking like the conventional route into a job after university and things like that. What would you say to these young people that are having these ideas and thoughts and like what would you say to them in terms of like perhaps pursuing that?
Great question. So I'm going to answer that in a sort of a roundabout way.
All right, I'm ready.
It's one of the things that I think you probably have noticed from my experience, that there's no real like direct route into entrepreneurship or venture or whatever. Like there's no like formula. Like if you want to be a doctor, I'm 5 generations of doctors. And so, you will understand this.
Yeah,
I'm a failed doctor, a disappointment, and a fake engineer because I'm a software engineer. But that aside, there's no sort of like formula. But if you want to be a doctor, you do this. If you want to be an accountant, you do that. With entrepreneurship, it's really a mindset thing, and it's a personal desire, and it's a personal intrinsic sort of drive that you have. So I guess the thing that I would say is that when I come across people that want to be entrepreneurs, I want to know why they want to be entrepreneurs. Is it some intrinsic motivation? Are they missionary about this? Or are they just mercenaries? When I say mercenaries, I mean, people who are just interested in hopping into the next big thing. So, like
riding the wave. Yeah.
Just going back to like why, people are always surprised. Why did Etisalat hire me as an M&A guy, like in 2006? That makes no sense, right? But what was going on in 2006? There was a boom in the financial services sector. So if you were anywhere in the world and you wanted to get into financial services because it was a hot new industry, you could have a degree in philosophy and you would get a job in an investment bank. And I actually had opportunities to get into investment banking, but I couldn't stomach investment banking. So that was not my path. But the point that I'm making is, and then obviously I got into sort of M&A. And so Etisalat was looking for financial people with financial services background, but anybody who wanted to be in that business, went there. So I guess what I'm trying to say is, every now and then there's like a new cycle of things that are hot and exciting. And right now it's entrepreneurship. So everybody and their mother and their cousin and their sister and everybody's just like wants to be an entrepreneur.
Yeah.
Why? There's like a fleet of lifestyle entrepreneurs that want to be entrepreneurs, but they have no direction. So anyway, I guess to answer your question, what I would say is, you want to be an entrepreneur because you want to be an entrepreneur. then the question is, why? What are you trying to solve? What is the problem? So I didn't become I wanted to be an entrepreneur, but I quit being an entrepreneur because there was nothing passionate enough. Besides the girl, the other reason why I took a job is because there was nothing that I could think of that I was passionate about that I wanted to devote the rest of my life to, if that makes sense.
Yeah.
Solving. And because of that, I kind of went into, corporate. So I guess the point that I'm making is that if you're starting out, if you're graduating today, and you want to be an entrepreneur, and you know what you want to do, then go and do it.
Yes.
Like right now you're focused on building a startup. This is a problem that you've come across that you're like focusing on trying to solve.
Absolutely.
You want to figure that out. That's okay. If it doesn't work out, you're still young. You can get a job and you can learn. But if you don't have an idea that you're focused on, you don't know what you want to do, then I would say get a job, learn a trade, like I did, and then you'll figure it out.
Yeah. And
I don't know if I didn't really answer your
it's good
question,
advice.
but I'm just trying to.
but there's also other ways to test if you are entrepreneur material or not, is to join a startup and see if that's the lifestyle that you would like to be a part of.
Yeah.
Because if you're, let's say, the first founding members of that particular startup, so it's as good as being the founders. So you're there with them in their journeys from let's say pitching to investors to also the lows of customer surveys and customer retention. So if that's something you feel you're confident about and that's the path you want to get into.
Yeah.
So if you can't have one, join one.
Yeah.
That's the best
Can't
opportunity.
beat him, join him.
Yeah.
Yeah. And it's a great way to learn, right? I mean,
Yes.
it's in startups. So I think one of the things that I would say is that if you were to ask me if I were to do it all over again, what would I do? I mean, I kind of enjoyed my journey, but it was a tough journey. Like, it was tough at every point, right? I never raised any money. I didn't have access to capital. I didn't know how to go about doing that. So I would bootstrap that. And when I say bootstrap that, like I did temp jobs, to pay the bills, or I used credit cards, and then the first check. So it was tough journey, but it taught me a lot, right? It taught me how easy it is to start something if you're really passionate about this. And so when I come across founders who are like, we need capital to start, I'm like, no, you don't, because in 1999, I didn't have any capital, and I wrote some code, and I got there. But what was interesting was like, I also think about the 50-year-old person from St. Louis that I met in Chicago, who I was complaining to because I said, I need money to start, and he was like, no, you don't.
It's cyclical.
Yeah. I mean, it's like, I had somebody pointing that out to me, and I was like this bitter young man who couldn't get any help in doing what he wanted to do. And the reality is like, you just look into yourself, and
The universe doesn't owe you anything, basically.
the universe doesn't owe you anything, but find your path, find something that you're passionate about, and solve it. So so if I were to go back in time, I did like the journey, but now I think about it, I'm thinking maybe I shouldn't have been so dismissive about investment banking, or maybe I should have stuck to being. I mean, I guess one of the things that I was lucky about is that I was a software engineer, so at least I did some coding and some development. But I think I would have done what you suggested, which is I wish I'd done that, which is I had a bunch of like opportunities to join, startups, and I wish I'd just taken that job instead of thinking I'm going to compete with them. So, for example, like I built this product that was competing with Cvents, which is like this long time ago, but it's like an event management software.
Okay.
I should have just joined Cvents, and I would have learned so much more about that journey. So I think that's actually great advice, and I just figured that out. Thank you.
So I've just done that recently because as a startup entrepreneur, so sometimes the market is not ready. Sometimes the product is not that level that you can sell it to customers. But hey, it doesn't restrict you to get the entrepreneurial experience. You can work with other founders, learn from them. You take the best bits out of them and create your own personality with it. And perhaps maybe 3 years down the line or 5 years down the line, you're prepared for another venture, and that might just click.
Yeah. And it's important, right? Because you need domain expertise, right? So when I look at, you need some sort of domain expertise or some type sort of life experience.
Exactly.
That, like even if you don't have domain expertise, you have life experience around, things. So if you look at like the Careem founders, right? They're, that idea came to them because of a friction that they experienced every day. Now, yes, they were, consultants at McKinsey, but that was the lifeblood of all of these limo guys. But I remember, meeting the Uber team that came out to scope Dubai around that time, and they came and they realized that the market structure doesn't really work for Uber, and so they left because they're like, oh, this market's not ready, because you can't, none of us, we have specific visas, so we can't use our visas to basically rent our car out, or you know what I mean. We can't do that.
I get you.
So the market construct wasn't there. But these guys, they knew that there was plenty of capacity, and they were like, okay, we don't need to follow this exact same model, but we can still offer a similar solution, but just customizing it for local needs. So I guess the point is some experience. Now they were when I came across Careem, I actually turned them down because I have a bias. I have my own biases, and we spent millions and millions of dollars on McKinsey, and most of these people were just kids who knew nothing about anything, and they would tell us or tell people that were much more senior than I in Etisalat how to run their business. I'm like, what do you know? But I wish I'd not been so lazy. I wish I'd looked at their backgrounds, because when I looked at their backgrounds later on, because I realized, oh, Careem's successful. How can a consultant be, to do that? And then I realized that they actually had a startup before, and they'd been through the entrepreneurial journey. And they joined McKinsey because they had student loans that they had needed to pay off, and an unsuccessful startup that wasn't helpful.
Yes.
And so but I guess the point that I'm making is that their success was there's a million data points of experiences that they had over the course of their years that prepared them for that. Yeah. And so if you don't have enough of those, you might get lucky in your early, and you might strike it rich or whatever.
Yeah.
But what have you really learned?
Yeah. So you've invested here. You've invested in the Valley.
Yeah.
Do you see any differences or similarities between the two?
Yeah. So I mean, one of the cool things about working, at 500 Startups was we invested globally. And so we were exposed to not just, I was lucky enough not to be exposed to just to the UAE ecosystem or the MENA ecosystem and the US ecosystem, but also other ecosystems around the world, because we had funds all over the world.
Okay.
And that was really, really cool. The differences between, I guess, or the interesting things between Silicon Valley and here. So, we hear a lot about, Silicon Valley's, it's dead, it's over. That's not true. Silicon Valley's has the highest concentration of the smartest people on the planet.
Yeah.
And the most driven people on the planet. It's a given that Silicon Valley is always going to be the epicenter or an epicenter for innovation, and that was always a given to us. But what was also a given to us was that at some point other ecosystems would evolve with technological advancement, but also cultural change. Okay. You would start to see other ecosystems develop, and so what we're seeing here is, for example, ecosystems here. So Dubai, Abu Dhabi, Riyadh, Doha, Egypt.
Yes.
So all of these ecosystems are starting to develop. And obviously they're much earlier in their gestation, I guess. Okay. So Silicon Valley has been around for decades. It's been around for a long, long time. And it took a long time to develop that ecosystem. And obviously, what you have in the US is you've got this benefit of a lot of universities, research universities, a lot of IP that is created. So a lot of talent is available, and a lot of IP is created in the US. That's cool. But when you look at the US, you think you wonder, like, if you think about like the highest concentration of top universities, any one city, it's actually maybe Boston. So the question a lot of people ask is why is Silicon Valley in California?
Yeah.
I mean, Stanford and Berkeley, those are the two, right? So but in Boston, you've got like so many, top tier 1 universities. So, I mean, this we can talk a lot about that, but I'll just skim off the top. California is a special place. So when you think about like the early immigrants, the early people that migrated to the US, they were coming from Europe, and they were escaping the structure that existed, the social and economic structures that existed in Europe, and they were sort of escaping that because obviously they were disenfranchised in that setup. So they moved, and obviously the East Coast. And then there were people who felt that they wanted to keep going further, so they were a little bit more adventurous. And it was already pretty adventurous to sort of go to the other side of the
pond,
and to keep going, and then and to keep going, and to go to the Midwest and settle, and then just keep going. So that is like a collection of some pretty special people.
Yes.
And then when you look at sort of, for example, employment laws in California, the employment laws in California are where, for example, let's just say I work for Google in DeepMind or whatever, and I can switch and I can go to OpenAI. Or I can, if I have an idea, I can go and build my own company, and I can compete with my. So there's no non-compete. It's like a very the employment laws. I guess what I'm trying to say is the employment laws there are fostering this entrepreneurial sort of environment, because you can be successful, and of course there's capital available and all of that. But in the East Coast you don't have that. You have non-competes, and they're quite so. So California is quite special. So there's and it took a long time. There's a lot of ingredients there. But what we have with Silicon Valley is the blueprint.
Yes.
And so what's cool is that when you've got this blueprint, Dubai can look at the blueprint, and like they've done before, you just copy it. And that's what's happening in Riyadh. So you've got the blueprint. So you make changes to the laws. You make changes. You make capital available. So that's I guess like a very superficial sort of a response to like how ecosystems are evolving. But I think what's really interesting is mediums such as these, like, so we're having this podcast, and so now like a bunch of guys, Sandpit startups in Dubai can communicate with somebody or can be viewed by somebody in Indonesia, right?
Yes.
Or wherever. And so I guess what happened is that the internet was amazing, right? So like people could, read blogs, or YouTube, people could watch stuff. And what that meant was that somebody sitting in Singapore could be inspired.
Yeah.
And even if the environment wasn't perfect for them at that time, they were inspired enough to do something and start something. And so I guess that's kind of like what led to this cultural shift. Now, I think what's now starting to change is a couple of things. One is this comfort with failure and risk.
Embracing it.
And that is something that has been slower to happen in other ecosystems, but you're starting to see it. And then of course capital.
Yeah.
So you need capital, right? And so when you look at, for example, countries like the US, they have a pretty reasonably high level of capital available relative to GDP, their GDP. But Israel, for example, which is a very small country, has probably one of the highest GDP the
The
innovation
capital ratio,
capital GDP ratio. So. And that shows you that you don't need to be this big, massive country
with a huge population.
but you,
yeah.
but you do need to have talent, and you do need to provide them with capital. And obviously, there's other ingredients as well, laws and whatever. So there's a lot of ingredients there that you can do something with. In the MENA region, it's exciting. There's more capital than before, but we're way, way, way behind in terms of availability of capital, which makes it pretty exciting for me because it's the early innings. So I guess to answer your question, which I haven't really yet, is we're early in our development of our ecosystem, but our ecosystem will develop much faster because we already have a blueprint, and more capital is needed. But there's something that happened recently, right, that we all lived through, which is the pandemic. And that was kind of interesting. So I'm a B2B investor, an enterprise software kind of focused investor in the region. And 5 years ago, I wasn't so excited about investing in the region because most of what you saw was consumer focused plays or like e-commerce and logistics or whatever. But I didn't really see a lot of stuff that I find interesting, which is basically boring back office stuff that solves problems that you never see it, but it makes a lot of money. And I get really excited about things like that. And we weren't seeing those types of startups. And then the pandemic happened. And then all of a sudden, we're all in lockdown. So we're in lockdown, but we're not decision makers. But guess what? Decision makers are also in lockdown. And now they're able to open up and they're able to see that actually automation, technology, these things can enable businesses to continue to operate. And they started to see the efficiency that brings, and they started to see the value proposition of technology, right? So, and so what happened there was like they started to open up. I've seen this. The corporates started to open up, and obviously the government support was there as well to kind of open up and be more open to technology. And so corporates started to buy services from startups. And that sort of increased, created this whole potential new market opportunity, which obviously I've created a fund for with my partners.
Amazing. And as you mentioned that you have been in a couple of geographies, and being a VC, I'm sure you'll be seeing a lot of founders with ideas, and they'll be pitching to you with their pitch decks. So as a VC, what lens do you look at these ideas? As a must-have idea or a good-to-have idea?
So what I would say to that is ideas are dime a dozen. Anyone can have an idea. I never had any ideas. I picked other people's ideas, but I executed them better. Right. But I think if I think about why I was successful or when I was not successful, it was because there was an idea. I was very good at executing it. But it didn't work. And it didn't work because I wasn't as passionate about it, or I didn't really understand the problem as well. So when I meet founders, I actually don't care as much about the idea. So when I first meet a founder or an entrepreneur, I actually want to know their life story, their history. I want to know, where they came from, where they grew up, what their parents did, what their backgrounds are. And what led them, what their life story was. Because what I'm trying to figure out is what led them to sit across the table from me, to talk about and pitch to me this opportunity. And if they tell their story well, I should be able, it should just be like, makes complete sense, right? So that's what I'm looking for. Like, it makes sense. This is something that they came across, they understood as a problem. They observed this problem for a while, and they observed that nobody's solving this problem. And then they started to feel that there are other people that feel the same pain point. And then they start to think about, okay, is somebody trying to solve it? Nobody's trying to solve it. There seem to be a few people that want to that have this problem as well.
Yes.
Maybe there's a market opportunity.
Yes.
And so that's kind of how you then. So what I'm trying to do is figure out how big of a problem is this? Is this problem something that that is like a painful problem, or is it a, like, I guess, is it a vitamin or a painkiller kind of? That's kind of what's going on in my head when I'm thinking. So that's where I focus on, like, trying to understand and visualize the problem that they're solving. How painful is this problem? And then you look at the solution and you think, okay, is this solution a painkiller or is it a vitamin?
Okay.
So how painful is that problem?
Yeah.
And what that means is that, are people willing to pay for it? Is it painful enough that people would be willing to pay for it? Or use it and be engaged, and there's another way to monetize it.
Yes.
And then is this a real painkiller solution or not?
Okay.
And then are they the right people for it? If like I've met founders in, like we were talking about this once.
Yes.
Like I met this founder that I was going into the meeting. I already had decided that I was going to go through the process
with them.
and this was going to be a no, because it was a health tech startup and the person had no background in healthcare or health sciences or whatever. So I was like, I don't see it. Right. But that was my own biases. And that's kind of like what I'm constantly fighting against. It's like my own biases. And so, what happened is that he started telling me his story. And what happened is, like, so he was a consultant, at one of the top firms, big firms, in procurement or whatever. And, but he had a health issue, a personal health issue. And when he had that personal health issue, that led him down this rabbit hole of understanding that there was this personal health issue is something that was quite common. And there are a lot of people that have this issue, but there's no support systems for them. And so that led him to then build this. So to me, that made a lot of sense. And, we backed them, and that was a successful investment. So, I guess the point I'm making is that, there's no cookie cutter response. Okay. Sometimes you find now there was some healthcare's a regulated industry. Yes. So, there are things that you can do, thinking openly, but there are things that you need to understand in terms of the constraints. Yeah. And I know this personally because I've been burnt in that space in the early 2000s. Okay. But if you're passionate about it, you will find the knowledge that you need. You will understand it. I mean, I think this person was like a PhD equivalent of, in health sciences. But, he was able to build a team that had the requisite domain expertise and networks within the industry that were able to then sell the services that they were selling. So, you will find a way. But really, to me, it's intrinsic motivation. What is your intrinsic motivation? Why are you solving this? Is it just because you want to be an entrepreneur and you want to be rich or famous?
Or there's a burning desire to solve a problem.
Or do you have a burning desire to solve this problem? And if you do have a burning desire to solve this problem, then come and talk to me, and maybe we can brainstorm and figure out how, we can find a business model that's viable. Yes. But if you're just interested in being rich and famous, then maybe there's somebody else that you should be talking to.
So the question is about the forms of funding. So I'll just go with that. So I'm aware that there are various forms of funding in the VC space, but the most common ones are equity funding and convertible notes like SAVE notes and KISS. And a connected question would be, once the funding is there, like you have confirmed, is it given in tranches or is it wired in total?
A great question. I'm actually glad you asked that question. So I'm going to answer that from an entrepreneur's perspective. Yeah. You're an entrepreneur. You're building a business. Okay. You need investors who believe in you and believe in the problem that you're solving, and you need them to be on board. So if somebody comes to you and is thinking about tranching the money out to you, that means that they're not 100% convinced about you or the opportunity or whatever. And so maybe there's a conversation that you need to have around maybe you raise less money and see what you can do with that, or you need to find another investor, because what you need is people that believe in you and believe in your ability to execute.
Yes.
I think tranching out is a bad idea because you're handcuffing an entrepreneur. The entrepreneurial journey is not a series of successes; it's a series of mistakes and failures, and so you need to give the entrepreneur the space, the room to make those mistakes. And so, when I start thinking about tranching, I already know in my mind the answer, which is this is a no, because I don't have conviction. So I guess the point I'm making is, so equity, obviously, equity investment makes sense.
Yeah.
Convertible is fine, whether you want to do one way or the other.
Yeah.
At early stages, I think convertibles make a lot more sense.
Right.
But it's all in or all out. That's just kind of like my perspective. But the one thing that's also connected to this I would like to mention is that consider whether you actually need to raise money. So you've bootstrapped your business so far, and now you're thinking whether you need it or not.
Yes.
And you're going to go through that journey and try to figure out whether you need to or whether you could still continue to bootstrap and find sort of product market fit. It is possible. There's many businesses that bootstrap to 20 million, 100 million ARR. So it is possible. It's very, very hard, of course. But consider if you need capital, if you need to raise capital, first of all, and then consider how much you need to raise and from whom.
Right.
So if you're a scalable startup,
Yes.
then maybe venture works. But not everybody is a VC backable business. Not every business is a VC backable business, and that's okay. That's not a bad thing. If you ask me, I'm a VC fund, right?
Yeah.
So if you ask me, who are my LPs, my investors?
Yes.
Most of my investors are not tech people. They made their money from the offline world, the traditional world.
Okay.
You can become rich
In other ways,
in the real world,
Yeah.
right? So you don't necessarily have to be a tech entrepreneur. So, consider whether you need to raise money from a VC, because when you raise money from VCs, then VCs expect you to scale and grow, and they have expectations.
Yeah.
And if you're a business that will churn out a lot of cash, but may not grow as quickly, maybe there's a lot of family office money that you could get. You could take a loan from a bank. There's so many ways to finance your business. So consider carefully the type of investor you get. Not everybody. It's cool to have a VC investor, but it can be a double-edged sword. That's just at least my own perspective.
If you had any nuggets of knowledge to leave with our viewers today, what would it be?
Well, I guess my nugget was the one that I just gave, which is...
Yeah, but we want to squeeze one last drop out of you.
Oh, gosh, I wasn't prepared for this one.
Sorry, you're on the spot now.
No worries. So, the only takeaway that I can think of right now is that, if you're an entrepreneur thinking about, or if you're somebody that's thinking about becoming an entrepreneur,
Yes.
don't buy the stories that you read or hear about these successful entrepreneurs, because their life sounds amazing.
Yeah.
It sounds perfect. But everybody that you meet or hear about that is successful have had a million knocks.
Yes.
So it is hard. And you've had a million failures. You've made a lot of mistakes. I continue to make mistakes.
Yeah.
And so I guess what I would say is, don't buy the success stories and just focus on the highlights. Focus on what you're doing, focus on something that you're passionate about, and get prepared for a bumpy ride.
Yeah.
And don't get disappointed every time you face adversity, because every time you do, that is a learning point that is going to help you, do something, execute better, and sort of do better the next time around.
Fantastic.
Yeah, definitely. I'm with you on that. And I remember one entrepreneur mentioning that there is no overnight success. So it's basically after 5 years of struggle, and then there is that overnight success.
Yeah.
So I'm completely, I'm sure there's a lot of takeaway that they will get from this podcast and
Thank
with
you.
the talks.
Better said than I did. So thank you.
Thank you
so much for your time. It's
It
been
was a pleasure being here, guys. I really enjoyed myself. Thanks.